For users living on this channel for educational purposes only, is not intended as financial advice. Let's take a look at miners today. Previous two miner videos I did were August 2023, where CleanSpark looked like a standout. It's done well since then. And February 24, which I think I liked Wolf and IREN at that time. I will have no such recommendations for this video, but let's talk about what it takes to analyze the miners, all the data, all the inputs. This is the Riot facility at Rockdale, I believe. It's just a good idea to know there's a physical footprint here and everything that entails, including real estate, power, proximity to cooling, ASICs, obviously, but we're talking about something at scale, management of this, the network side of things. So when we're putting all this together, and really I'm mentioning this specifically for the AI narrative, the AI narrative is not what this looks like. AI needs a very specific data center. Bitcoin mines, in a sense, are dumb data centers relative to AI. So to do both well is difficult. It's easier to do the AI side well and tack on the Bitcoin miners on top of that. It is hard to do backwards compatibility from whatever this is here at Riot to a stage 3 data center or whatever they call it. So what does it take? You need hardware. Obviously, you need the highest efficiency. We'll take a look at the ASICs. Cooling, a big concern. Climate, dust, humidity, all big concerns in the data center side of things. I don't know for sure if immersion cooling fixes the noise. I assume it reduces the noise significantly. I don't know if it fixes the noise, but that's a big concern for these startup miners who are plopping themselves next to rural communities and cause problems. It's not just NIMBYism, it is loud. So that needs to be a concern and needs to be taken care of, because the last thing we need is another couple dozen headlines striking down the industry. Electricity, obviously, they want the lowest cost, ideally free, ideally abundant, stranded, getting paid to take the electricity off the grid. All that is what a miner wants to see, and they can be anywhere. They prefer a place with clear regulatory outlooks, clear regulatory rule of law. So when we're thinking about Scandinavia versus South America, when we're thinking about the United States versus the UAE, different places around the world will have different issues. And in the United States, there's a lot of abundant, cheap power in Texas and in the South. You've got things like hurricane risk, tornado risk. You know, we're not going to put a mine this size in Tornado Alley, right? We're going to put a mine probably close to a nuclear facility if we can. Ideally, those nuclear facilities have the same concerns in that they are not potential targets for acts of God, like a hurricane or a tornado or earthquake. Maybe the most important thing when looking at the Bitcoin miner charts is revenue. I don't think that's a surprise. This is a business after all. So what do we want? We want high fees if you are a Bitcoin miner. If you're a Bitcoin network user, you obviously want fees as low as you can get them. But if you're a miner, you want fees as high as they go. So what do we need for that? We need some sort of on-chain activity. And the question obviously is now, do we have any of this right now? We don't need everything always, every time, all at once, but you need a little bit of something most of the time. You need technicals on your side. You need some sort of fundamental argument here on your side. So to have none of it now, which is what I feel like, unfortunately, is where we're at, fees are low. Bitcoin price is declining. It is a bull market, but we've been ranging, but we're going down. So that is not going to help the miners here. It just isn't. Obviously, you don't want to hold the miners through a bear market. That has been catastrophic. You're talking about altcoin losses. Then we start talking about Bitcoin beta. We start talking about leverage. All these things are something to think about when you're putting this in a portfolio or a group of stocks and equities. I know a lot of the miner people just love the miners to death. That's all they have. I don't think that's necessarily the right way to do it based on what we've seen historically. If they don't have the revenue, they need a non-BTC narrative, whether that's AI, curtailment, load balancing, something. They need anything that gets them out of this revenue trap where all they are relying on is revenue from the network. That's good for the miner and good for the network because it keeps the miners alive through the lean times. Most recently, we've had this AI data center narrative. It's different than Bitcoin. It's outside of Bitcoin. It's completely different. They need 100% uptime. They need redundancies. They need a different level of data center than Bitcoin entirely. But the good news is Bitcoin miners can go into these data centers, participate in load balancing, curtailment. So it's really the other way around. But right now, as those data centers are being built, the power contracts for most of these miners are worth more than the mining company itself because of this land grab, this power grab, electricity grab that we're seeing on the AI side. And I've got some headlines and things to discuss there. But if I were to distill what I'm looking for on the fundamental side, it would be something that touches each piece of this. We want S21s. We want negative cost electricity. We want to get paid to take the electricity off the grid. We want multiple locations around the world so that there's not an issue in any one location. Recently, obviously, with the Trump stuff embracing miners, that has changed the potential future regulatory outlook in the United States. But I don't necessarily believe that the dire outlook we had previous to this was necessarily hurting price on the miner side in the near term. Revenue is catastrophic. We'll look at that. So each of these pieces, each of these components, we can look through and go and look, okay, what are my ASICs right now that are functioning at 4 cents per kilowatt hour, which is probably about what the miners pay. What does the profitability look like? Are there any miners coming down the pipe? That's going to affect hash rate regardless of revenue, regardless of hash price. We're probably going to see a bump in hash rate, which is what we've seen. And this gives you an idea of the best tech available to the miners currently. It also gives you an idea of sort of what's available still. Are there decade-old S3s and S5s? Probably not, but maybe. The other thing about hash price, hash rate, revenue, as maybe electricity costs go lower or hash price goes higher, revenue goes higher, we start to see these older miners come back online because they hit their profitability break-even plus level. So just because something is deeply not profitable doesn't mean if we put an S3 in a stranded well, we're not going to use it because you can't, just as an extreme example. Now, the Miner Mag has the best aggregation of data. I've got a spreadsheet of my own that I'll get to at the end here. But if you're looking for anything specifically in the publicly traded mining space, it's one of the best places to go. I'll put all the links to this in the description of the video. Luxor also has all these publicly traded companies listed with a sortable table, hash rate, market cap per hash rate, market cap, everything you'd want in a bare bones way to get you started looking around. Hash rate, obviously super important. And deceptively, if hash rate is rising, because it is a zero-sum game for the miners, if hash rate is rising and a miner as a business is not participating in that rise in hash rate, they are losing in their percentage of market share of the network. So ideally, this is harder to measure, but ideally what you want is an individual company rising in the hash rate as a percentage of market share. So for instance, as hash rate is falling, you want a company adding hash rate to the network because that would represent growth. That would represent an increase, most likely, in revenue. Hash rate at all-time high means difficulties at all-time high. And if difficulties at all-time high with price declining, again, this is not a backdrop you'd expect miners to do well. From a technical side, trading Bitcoin price, hash ribbons has been a great indicator. 30-60-day moving average on hash rate to show you when, as a group, are we seeing capitulation on the miner side of things. Typically, a decline in hash rate means miners are selling more than they're holding. And if miners are selling more than they're holding, that is applying selling pressure on price. Recently, hash ribbons have flipped up again, which is good for price in a vacuum, but again, bad for miners because hash rate and difficulty are rising. So unless you're participating in that with the ASICs, with the S21s, either more miners or better tech, you are not doing so hot relative to the group. Hash price is something as a group we can look at for the industry. Hash rate price is currently at an all-time low. This is based on revenue and fees. Electricity, it's a good index to see what's going on. So what's happened in the past 5 years, what's happened in the past year. Miners right now are, as a group, have very, very small revenues relative to what they've seen previously. So if anything, I'd expect hash rate to potentially decline The dream utopia for these businesses, unfortunately, for the network is complete disintermediation and distribution of businesses and mining pools. And all we see are stranded wells. We see every house mining. We see every bank mining. We see every government mining. We see every industry mining, right? That is best for the network. So if revenues continue to decline, that's potentially where we're going to be headed. We're going to hit an equilibrium eventually where we're just continually squeezing out the miners who are inefficient and cannot scale. So it is a ruthless business. If we look at fees, again, one of the best measures for how the miners are doing, what do we want to see? We want to see fees absolutely skyrocketing. The problem is, historically, this generally doesn't last. We generally don't see fees sustaining themselves. Thankfully for the miners, during a bullish period, it's a bit of a double whammy. Make hay while the sun is shining. It's feast or famine. In a bull market, we typically see fees rising in terms of BTC as well as USD. But in a bear market, it is nothing, right? This is where we cull the inefficient miners. And today, currently, we have somewhat of a bull market still. We're ranging. And yet revenues are where they are. They are very low. Another way to look at hash price is just look at revenues on chain. So although mining fees in BTC terms are at lows, BTC price is obviously where it is. So it's not completely dire, but putting everything together, miners are going to have an extremely tough time doing well. So what does that mean? More debt, more borrowing, more dilution, more inefficient miners going bust, miners turning rigs off, miners mining with free electricity or at a loss, hoping for a recoup of revenues in the future. So what do we want to look for going forward? We want to look for on-chain activity to pick up with the ETFs, with the Bitcoin ETFs. That may not happen with Lightning Network. That may not happen. So we may need things like ordinals, which aren't for me. I don't like that they exist, but they exist. And if you are a miner, you want to see this. Whether or not you say publicly you do or you don't, you do, because this means more fees, more revenue. What has happened to ordinals over the past year? Almost complete death. Just nothing, right? Very little activity. And most importantly, fees paid has basically zeroed out. If we look at the strong price swings for miners and what to look for in the future, we want to see stuff like this, right? I keep repeating myself, but we want to see fees rising. So if fees are rising and prices on the mining side aren't, there's clearly a disconnect there. I would consider that a bullish divergence. We don't see that. And runes died almost immediately after they came out. This is more altcoin activity, and it's just not the time for that. Look at altcoins broadly. They last for a couple weeks, a month, and then activity is gone because people have moved on. So this is not good for mining revenues. Pull multiple is something else we can look at. My guess is over the next 2 months, Pull multiple is going to get crushed. This is mining profits today versus the past year. And this continues to hold below 1. Typically a buy zone would be below 0.5. A sell zone would be above 3. So miners are not having a good time right now. Some more data points if we want to look at all the publicly listed miners, monthly production. Farside, along with ETFs, has that as well. We've got bitcointreasuries.net to figure out how much BTC each of these companies are holding. Ideally, as a trader, I don't want to see these companies holding any BTC because I want to have all of that baked into price. The last thing I want if price drops below 60 is, 60K. Some miner comes in and says, I'm unprofitable. I need to sell my treasury now. That's not what we want. It feels great going up. It feels great seeing this BTC absorbed, but to have a business doubly exposed to BTC price seems very silly to me. So Marathon recently came in and bought BTC. Okay, great, good for them. Has that helped their stock price? No, I'd argue it hasn't. We'll take a look at that. If anything, in a downswing, it is to their detriment to be holding more BTC, obviously. Now you'd say, well, they're playing the long game. Everybody's playing the long game. We're here for the next 10 years. That's all fine and well. But with the cycles that we've seen, to hold miners in a bearish period is a mistake, flat out. You have to be tactical. You have to be opportunistic if you want to trade these and make money broadly. So here's where you can see the list of the treasuries. As far as headlines, we've seen a few M&A rumblings with Riot and Bitfarms, that seems to have fallen through. They've tried to hostile take over them. We've had some AI conversations. Even that narrative is probably going to get challenged over the next couple months, even though the data infrastructure side of things is continuing to play out. It is certainly probably going to be less frothy than it has been. So the potential M&A deals are still there because of the power component, the data center component, the electricity contract component, the land component. But I don't think that's going to necessarily save some miner from continuing to unwind over the next couple months. Core is obviously another one that has a huge AI footprint with CoreWeave. As a business, if you're watching this video, you probably already know they previously had some degree of bankruptcy. On the sheet, this business looks great relative to the others. So maybe this is the diamond in the rough here, but because of the baggage of the company, I really do not like Core Scientific personally. Another article on data center demand. So this is real. This is out there. This isn't just, miners saying this, AI saying this. David Pan, by the way, at Bloomberg, a journalist who specifically focuses on Bitcoin mining industry. So we've seen various headlines, right? This is real. This is coming. Okay. Is this enough to hold a miner through a bearish period? I don't think so personally, but it is going to amplify the bullish gains if they return in Q4, for instance. So almost all of these miners are dabbling in some way, even if they're not talking about it, they're dabbling in it in some way. It's just too attractive not to, especially when Bitcoin revenues are as low as they are. It doesn't make sense not to think about the AI data center piece. So we can look at the performance of all the miners year to date, 1 year, 5 year. You do you focus on whatever you want. Inevitably, somebody in the comments is going to let me know that their miner has done extremely well. Okay. But when we look at year to date or 1 year, 3 year, 5 year, most of the miners haven't done great. A few of them have done very, very well. Wolf, IREN, CleanSpark, Cypher. The big miners, Marathon, Riot, have not done so well. And that's where the TA becomes very important. That's where maybe putting together a list and figuring out, okay, what do we care about? What seems to be the most important here? I'm certainly not a fundamental expert, but market cap per hash rate seems pretty important to look at. Cost to mine all in, this is coming from Miner Mag. That seems to be fairly important. We want a low cost to mine all in, and we want to look for dislocations of market cap per hash rate. So Core pops out here. Again, I don't know how much of this data is legit, so be careful with this. Definitely double check that. CleanSpark still looks okay in the group. And then some of this other stuff at the bottom, this like junior miner stuff, you got to be really careful because as a group, as a percentage of market share, these bigger guys are just eating their lunch. So maybe eventually these will be M&A targets or they will just disappear. They will go bankrupt. They will go defunct. Something else I added here was BTC held in treasury as a percentage of market cap. I don't know how much necessarily this is going to affect price of the miners, but it's something to think about. But I think the most important thing is market cap per hash rate and the all-in cost to mine. You can also look at the beta. You can measure this with an equation. I'll put all this in the description again so you can look at it. But when we're looking at, is this MSTR? Is this coin? Is it something else, right? Marathon 2023, more beta than both MSTR and coin. These numbers are as of February, but I think you get the point. There's certainly more beta in most of the miners than BTC. So if we look at them as a group, I don't know why Bitcoin Magazine Pro doesn't have more of the miners on here, but over the past 2 years, Bitcoin in the black, in this group at least, Wolf isn't on here, IREN, CleanSpark, those aren't on here. I believe those all are beating BTC, but they might not be. It's important to look at this because people will tell you, you hear things, oh, miners this, miners that, miners are so great. Miners are going to be a $5 trillion business or whatever. Do they beat BTC? That's what you need to know. The benchmark is BTC, and if they don't beat BTC over an extended period of time, what's the point? Certainly not a buy and hold. You can see here these amplifications of bullish periods where being tactical, opportunistic, and whatever, that makes sense. But over time, most miners don't beat Bitcoin over the past year. Again, the big guys, that ain't it. So you think, oh man, Marathon, they have all this hash rate, they have all these BTC. They would be such a great thing to buy and hold. That has not been the case. Absolutely not been the case. And we can keep going down the list here. 6 month, 3 month, you get the point. But most of these miners over time do not beat BTC. So we can look at an analog to this. We can look at the gold industry. We've got spot gold and GDX, which is gold miners. We see a similar phenomenon where, to me, it just doesn't really make sense to buy and hold the miners over time. If you're bullish gold, holding miners in that period of time may make sense. This is year to date, GDX versus XAU. It depends on what's in the basket of GDX. It depends on the allocations. Okay, fine. But is this a great argument for buy and holding GDX over XAU? It depends. I doubt it. I don't think so. I don't think you could tell me, yeah, that's a great buy and hold. Here's over the past 5 years, gold has performed better significantly. So as a trade, the mining side of the business may make sense. But as a buy and hold, it does not make sense. And the further we go out, the worse GDX looks. Since inception, hands down, gold is the winner. Since inception, GDX is still down. So you've got people telling you, just like the Bitcoin mining side, it's undervalued, the miners are going to come around, the ratio is out of whack. Okay, that may be true. But we haven't seen that yet. We certainly haven't seen that since inception of GDX. I don't think dividends are priced into this. So the total return is probably slightly different, but I don't think it makes up for this gap in difference. You can also look at the miners against gold directly, and you get a similar story that you get with BTC. This isn't some slam dunk, oh yeah, miners outperformed over an extended period of time. You don't see that. You see a range. You see places where it may make sense to buy and sell, but there is certainly not an argument for buy and hold here since 2012, miners versus gold. So we can just pull up Marathon versus Bitcoin, right? What happens? Has Marathon beat BTC? Definitely not. It's been down only. It's been down only. Is this the bottom? Can we draw some diagonal here and say, oh man, it's going to break out? You could, but it'd probably be better to wait till it breaks out than to jump in it here. Against Bitcoin, Marathon has been dead money since 2017 as a buy and hold. As a range trade, sure, but it's a pretty tight range at that. So you have to be very, very choosy with the miners if you're holding them over an extended period of time. You want deep discounts. You want massive dislocations in price relative to Bitcoin, because otherwise it just doesn't make sense. Here's WGMI in the candlesticks against Bitcoin year to date. So again, this is dependent on holdings. This is dependent on allocations, but this even had NVIDIA in it. At one point, it had a 20% slice of NVIDIA, and it still did not outperform Bitcoin year to date. And I guarantee you Monday, we will probably see miners down 10+% again, based on the price action we're seeing with BTC. So this isn't going to look better anytime soon. Once again, highlighting in a bearish period, even in a micro bearish period, miners are not the move as a buy and hold. WGMI versus Bitcoin over the past year, no contest again. So there are periods of time where you do see outperformance, right? But it is fleeting, it is minimal, and you really have to know what you're looking for, aka revenue, aka technicals, to trade that. So I would definitely use a lot of caution. And here's since inception, it's no contest. BTC up 38%, WGMI down. Still 29% since inception. But look, you could always make your own basket, pick your favorite 4, your favorite 3 miners, and go to town. But this specific basket, this is the only one we have with just miners, over time has not done well as a buy and hold. It has very streaky, rangy periods where it does well. So where might this outperform in the future? Again, back to the AI piece, back to the revenue piece, back to some on-chain miracle with fees. That's where this group will probably do better. But we're not seeing that now. We're certainly not seeing that now. And at some point, if enough of these get acquired or go defunct or bankrupt, this basket won't exist, right? So to some respect, the more success this basket has outside of BTC, the less likely it is to exist in the future. I don't know what the minimal number of holdings are for WGMI, but there's a world in which there just aren't enough components to make up a basket. If we plot WGMI in USD terms with the cloud, and we look at mining revenue, this is the only metric I was able to find on TradingView. It's been broken since the beginning of the year, but the swing in 2023, in the beginning and the end of 2023, you had the double whammy of revenue plus technicals on your side. In mid-2024, I don't know if we had revenue on our side necessarily, but we certainly had technicals on our side. So here as a group, technicals not on your side, the cloud telling you for a few days now that this group was in trouble. In looking at the individual names, it gets much, much, much worse because most of these have been dead money. But again, you've got people, I hear it, I see it all the time, telling you this thing to the moon. Okay, there's just no technical logic here for that. And there's even less fundamental logic for that. So unless someone outside of the Bitcoin industry, energy, maybe, nuclear, maybe, AI, again, maybe, a government, right? It's got to be an acquisition target outside of miners eating themselves where this stuff could start to perk up again. Sans revenue, sans bullish BTC. There has not been an extended trend in Mara for quite some time. There are periods where it does well, but multiple months is a stretch. A 6-month period, definitely not. We're just not seeing it. At this point, there's probably too many publicly listed miners, and there's too much access to Bitcoin directly. Previously, in the previous cycles, in the legacy realm, you had GBTC or you had Marathon, you had Riot. You had very few options. Because of the ETFs, because of MSTR, for instance, would you rather hold MSTR or Marathon? It's no question. Most people would just hold MSTR. If you want exposure to a treasury that's Bitcoin, you're going to hold MSTR. If you want exposure to the industry, you're going to hold coin or the ETFs. So I don't know who these companies are for anymore outside of retail Bitcoin people. CleanSpark had done well. Unlike Marathon, it reached its old inverted head and shoulders target. I was bullish on it, have been bullish on it for a few weeks. It looked like it wanted to go higher along with spot BTC, but obviously this was Friday. So opening on Monday, it probably opens 10 or less. It's probably down significantly. And to me, this is one of the better looking miners with the better looking fundamentals, with the better track record. And it looks like this. Okay, this is like the top of the heap. So most of these other miners look worse. Riot worse than Mara. Dead money. No trend. Where's this going? I have no idea. They're worried about acquiring another miner more than they are being efficient with their fleet. I don't know. I don't know what to tell people. IREN is another one that looked good in February. Took a long time to break out. And even that's giving back the gains here. So maybe you're hoping for a falling wedge, parabolic puke. It hasn't yet reached its measured move target. But if I had to pick a group, I still like IREN. I still like CleanSpark. Cores just isn't for me forever. I can't get past the baggage of the company, but it's done well. Technicals here leaning from bullish to neutral. But as a group, Cores is probably going to suffer a fate similar to its compatriots and move lower. Cypher's another one I've liked because of the technicals. They had that M&A announcement or target announcement, and that was the top, basically. It still looks better than Marathon and Riot to me, but it's gone nowhere, right? It's gone nowhere since mid-2023, and it did not hit its old consolidation target. So it's very hard to find strength in the group here. Bitfarms had looked okay over the past few weeks, potential bullish consolidation. But that, again, this is going to break down further on Monday. And at this point, that's probably what you can hope for as a buy. Just look for stuff that's absolutely down 25, 30, 40%. Bitfarms sub $1, CleanSpark sub 10, Cores sub 5. It's just stupid lows like that. IREN sub 7. That's what you want to see. You want to see mega pain because these charts have really gone nowhere for a long time. HUT, another just dead money, going nowhere fast business, unfortunately, right? We can look at the fundamentals. We can be bullish on the people. It just doesn't matter. The chart is the chart, and it's gone absolutely nowhere. Key level here, 1920, absolutely. I would set an alert at that level. Hive, I would set an alert at 450, thereabouts. But this company, the chart, this is going to go lower on Monday based on the price action we've seen with BTC, right? So sub 250, possible. And there just isn't any strength anywhere. Wolf even has come off significantly. Maybe it goes back to the breakout level at 280. And just another example where you have to take profits on this stuff, and it is not a buy and hold, even in a bullish cyclical period with BTC. It's just such a challenging environment to hold this stuff for an extended period of time. Something to watch for outside of just individual prices would be miners bouncing first before BTC. That's usually a pretty good signal for oversold conditions. But there's nothing on this chart trend-wise that tells me it's a buy. Then the junior miners, the worst examples, STIG, I'd set an alert at 8 and forget about it. Just assume that this goes sub 2 to some sort of M&A bankruptcy acquisition target eventually. I'm not here to stick around to find out what happens here. Trend has been bearish. Consolidation has been bearish. That's just, it is what it is, right? It is what it is. GREE, same thing. This has not been bullish. I think in the last video I mentioned potential Adam and Eve inverted head and shoulders that never played out. And until it's back above 8, it's just not worth it. So as a group, I really don't think there's an individual chart that's bullish right now. And that's not a surprise. Bitcoin is down 10, 20% over the past 2 weeks. Miners are basically altcoins. They're going to be an amplification of that on the swing highs or swing lows. So miners should be down 20, 40%, potentially, right? Like it could get very ugly. The uglier it gets for BTC. And then the last one, CAN, also just never been bullish outside of 2021. And the easy thing here, like those legacy charts on Pfizer and TLT and even gold, it's going to be so obvious when this stuff swings for a bullish trend because it's never really had that outside of once. So let's say, for instance, I'm bullish on this chart. I would wait until it's above 2. Okay, it's got to be above the cloud. Look at all the alt charts that are similar. Look at ETH-BTC, similar. Technicals are very powerful. Technicals are your friend, regardless of how you feel about the industry, the people, the network. I get it. But between fundamentals and technicals, you can get a pretty good idea of how the companies are doing. So just lastly, the miners I still like here, only just. WGMI I would personally avoid. It's not for me. I won't be adding to that one. CleanSpark looks atrocious. Okay, the cloud does not like this. I still don't hate the business in the group. Riot is an avoid for me. Core an avoid for me personally. IREN still looks fine. Cypher barely fine. Bitfarms maybe something to think about, but everything else really needs to prove its worth first for me to pretend to care. That's just the way it is. Otherwise, just trade BTC, right? That's all I got for this one. Like, dislike, comment, share, subscribe, and happy trading.